They always say that you should invest as early as you can. But even with all these investment guides, people still find it very hard to start. It is not just about the risks, obviously, but many people do not know what steps to take to really get their investments going. You might have fallen into the trap where these people who have been investing for quite a while would always tell you to just get started, but never equip you with the important details in order to do this correctly. Okay, there is no such thing as perfect when it comes to investing. The first thing that you should know is that when it comes to investments and growing your money, you could be making the right decisions, but things can still go wrong. There will always be a huge possibility that you can lose the amount that you would initially invest. Okay, now that we have put it out there, it is true that the best way to start investing is now. For now, stop thinking of the time that has gone by. There is no room for regrets here. We just have to utilize the present in order to reap the benefits in the future. There must be lots of questions and confusions whenever you hear the word investment. That is why, in this video, we are going to explain what investment really is in the simplest way possible. This video will help you understand the following. What are people talking so much about investment? Where can you get money to start your investments? What are shares? What makes investment risky? When is the best time to invest? Some important reminders when investing. What are people talking so much about investment? To put it simply, investment is anything that would put money in your pocket. It is something that makes your money work for you and not the other way around. When you have a job, you are working because you need or want that money. Investing, on the other hand, would give you the chance to have passive income. Many people mistake a house as an investment. It could be one, but it can also be a liability. So how can you make a house an investment? The most common way to do that is to rent it out. Not only are you earning from the monthly rent, but the value of your property would increase over time. You are hitting two birds with one stone with real estate investment. This is why people invest their money on different things. They use their investment to get out of the rat race and have money even without all the office politics and overworking without appreciation. Don't worry though, because investing in real estate is not the only way to generate passive income. I know that you do not want to be an employee for the rest of your life, but not everyone who is just getting started with investment has a huge amount of money to buy property right away. Now, this brings us to our second question. Where can you get money to start your investments? You do not have to wait at least $100,000 before you invest your money. Many students these days are getting more and more interested in investing. Maybe because it gives them the hope that they can enjoy the lifestyle that they are dreaming of while still having money. For people who already have a job, make it a point to save a consistent amount of money every time you receive your paycheck. This would allow you to already have something when you decide to invest and grow your wealth. Besides, you can already explore different websites where you can buy stocks for as low as $5. A small amount can become bigger if only you accept the risk and rewards of investment. Since we already mentioned stocks, might as well walk you through what stocks and shares can do to make you more money. What are shares? Buying shares would probably be one of the most popular ways of having a passive income stream. Let us say that you love coffee and cafes are becoming more popular these days. You decide to put up a small kiosk outside your home and sell coffee. When your business became a hit, you decided that you needed to add more foods and beverages in the menu. But in order to do that, you need money to expand and make your kiosk into an actual cafe. So where are you going to get that if what you have earned is not yet enough for all the expenses that you have to pay? You can loan a huge amount of money, but I don't think that you would appreciate the interest. So what else? This is where shares come in. You can announce an initial public offering or IPO. Through this, you are letting the public know that you are going to break down your business into 100 or more shares which these people can buy. If you have seen the potential of your business, then so will other people that may be interested in buying a share of your company. Let us say that you offer the share for $10. The money that these people will pay you is what you are going to use to expand your business. Now, how can the people who bought a share of your company make a profit? As your coffee shop becomes more recognized, the value of the company shares would also go up. More people would be interested in buying a share of your company, so the people who bought it for $10 can now sell it to those who are interested for a much higher amount. This is how your company can grow and how the shareholders can benefit from it. For sure, you have heard of these big businesses and companies. All of them started to offer a part of their business to the public so that they can raise funds to make their products known and their names bigger. If you are wondering if you can have a share of these big companies, like Apple, for example, then the answer is yes. You can even buy shares of up-and-coming companies since their stock price would be lower. And then when the value of the shares that you hold goes up, then you can either keep it or sell it. You can play it safe with the stock market, or you can take big risks. Indeed, when it comes to this investment, the higher the risk, the higher the return. Of course, this is not always a win-win situation. That being said, let us learn about the risks that you should prepare for when investing. What makes investment risky? One of the main reasons why people are afraid to get in the stock market or any other kinds of investments is because of the possibility that they will lose more than what they could earn. When people start hearing about losing work, they run for the door and don't want to hear about it anymore. But that mindset separates the rich from the poor. These billionaires and even most millionaires take advantage of the stock market, and that is why they are getting richer. You can only lose money in the stock market if you're going to sell the shares that you have for a much lower price than you actually bought it. Let us go back to our coffee shop. If you bought shares during an IPO, that means that you only spent $10 per share. Now that the coffee shop has a lot of branches already in different areas, the current price per share is $50 already. If the coffee shop did well and the public loved it, the demand for the stock would also be high. But if the coffee shop was not doing well anymore and the branches are closing, chances are the prices per share would also be lower. If you wait for the price to drop to $8 per share, even though you already have an idea that the company is about to go down, then you will be losing money already. But if you immediately sold your shares when you notice that there are fewer customers and there are lots of bad reviews about the coffee shop, then you could have still made a huge profit. As I've said, many factors affect the prices of these stocks. Since we are going to be dealing with big companies and businesses in the stock market, you have to always be aware of what is happening to the companies that you have a share of. If you bought a share of a restaurant, but it is being overshadowed by its competitors, then you must consider selling the shares that you have of that restaurant already to avoid future loss. Yes, you cannot predict what would happen with these companies because supply and demand would play a huge role here. But you can always research and listen to the news since there are indicators if a business is doing good or if things are about to go down. Additionally, there are many resources that you can look at that would help you decide if you are either going to buy or sell these shares. Well, talking about indicators, is there a good time to start investing? When is the best time to invest? You must have heard this from many people that the best time to invest is now. It is never too late to get into the game. That is because you can afford to lose more when you do not have responsibilities like family and children yet. So if you're still a student and are already interested in investing in the stock market, then you are doing well because you have more room and time for errors. But for people who think that it might be too late for them to get involved in these investments, then that is also wrong. It is never too early or too late when we are talking about growing our money. As long as you are willing to learn and take a risk, you can always give investments a shot. Some people might think that, it's too late to buy stocks of Tesla since it is too expensive now. People who are thinking that it is too late are just afraid to take the risk and learn. Tesla is not the only company that is selling their shares. As I've mentioned, you can also take risks from new companies, especially if you are seeing potential in them. Buy those and then sell your shares when you already profited. Keep on doing this, buying and selling, until you can now buy shares of huge companies and brands that you are interested in. So it is never too late, remember that. But yes, when it comes to investing, the earlier you decide to explore this, the better, since the risks can be lower. Now that you are already watching this and being interested in finally investing, what other things you should keep in mind? Some important reminders when investing. First, and the golden rule for beginners in investing is only invest what you can afford to lose. You are not gambling here. You should be smart, observant, and ready. Do not use your emergency fund and invest it all in the stock market, especially if your knowledge is not yet enough. Allot an amount that is meant only to your investments. Second, actually doing it would be the best thing to do in order to learn. If you just keep on watching videos and reading the news without actually trying to invest, then you would not be getting any profit. The more you play it safe, the more you would regret not starting right away. As they say, experience is the best teacher. Lastly, do not be afraid to explore your options. If you invested in stocks and you lost all that you invested, do not let it stop you from learning about other investment opportunities. Downfalls and wrong decisions should be a learning experience and not a traumatizing event here in investing. Maybe real estate investment is for you. Besides, the stock market is not the only market that you can try. Maybe you would be more interested in index funds or Forex. If you want to know more about that, then that would be for another video. The bottom line, investment is not just for billionaires and millionaires. It should not be limited to them only, just because many other people are intimidated by the term investment. Many people have profited a lot from their investments. Before you say that it is too complicated for you, try learning it first and actually focusing on learning. Money could be a very important factor in any investment, but so is time. You have to give time to learn the market, analyze it, and learn from your experiences and mistakes. If you're ready to start growing your money, you should also be ready to face the obstacles in doing so. Nothing comes easy because even though investment is a passive income stream, you still have to be willing to study a lot of things in order to make the experience worthwhile. What is your most favorite part of the video? I would love to know in the comments below. Learn more about how you can start your journey towards financial freedom and wealth by subscribing to our channel. Like this video if you find value in content like this to see more. I will see you in the next one.